Okay, for the time being, let's put the spotlight on the automotive space. Tire maker Ceat has completed its acquisition of Michelin Group's Camso. This will increase the company's overall capacity by 15%. Our colleague Parikshit caught up with Arnab Banerjee, MD and CEO of the company, and started off by asking him about the acquisition and what their growth plans were going forward. Take a look.
Off-highway tires had always been at the top of the heap as far as capital allocation goes. And globalization was another interesting trend that we were trying to tap into. And of course, selling more premium tires. So it ticks all the boxes, the Camso, OHT, compact tire and construction, compact construction tires and tracks business. It is premium and it is mostly sold in EU and North America. And it is high margin. So it's going to add about 10% roughly to Ceat's turnover right away. The current plant that we have acquired has capacity utilization of just about 50%. So there is a lot of scope and headroom for further growth from this plant itself. And of course, when we acquire the brand 3 years hence, then a lot of other categories will open up for us. And we have to invest further to tap into those segments as well.
Right. Just to ask you again, how does this increase the overall capacity that Ceat has currently?
This plant is about 250 tons per day. So this is roughly about, you can say, a little less than around 15% capacity is getting added overall to Ceat's current capacity.
Right. I would also like to ask you that in terms of global markets, how does this increase your exports? What is the kind of increase that you are expecting on an annual basis?
So today our international business contribution or saliency to our overall business is about 19%. With the integration of Camso business on an annualized basis, this will go up to 25% straight away.
Okay. Just to also ask you about whether Ceat is considering similar acquisitions in this fiscal. Are you considering more acquisitions in other markets?
Well, this is going to cater to North American and EU markets. As you know, OHT is at the top as far as capital allocation goes, followed by passenger car tires, followed by actually two-wheeler tires, then passenger car tires, and then truck bus radial. So that's the hierarchy. We would be looking out for opportunities, but our first task is to integrate this business well and grow from there. But we will be proactive henceforth to look at opportunities which we can bite.
From your statement, it is clear that you would be investing about $171 million in the Sri Lanka market. How is this funding being generated?
So right now, about $137 million has been transferred to Michelin. Not all of them have gone to Sri Lanka. But broadly, 70-30 is the funding, 70 debt and 30 equity.
Okay. Overall, what would be your demand outlook for the domestic market currently?
In India, the demand outlook, as I have maintained, is fairly robust for truck bus radial, which is roughly at mid-single digits volume-wise. The passenger segment, four-wheeler segment is somewhat subdued, very low single-digit growth. And two-wheelers, especially scooters, also motorcycle tires are doing very well, very close to double-digit or high single-digit growth. Supported by very strong rebound in the rural markets.
The proposed GST changes, how do you stand to benefit from this?
Well, we don't know for a fact what these changes will be, but if it comes down from 28% to 18%, I think that's a very, very good input for long-term growth of the entire industry in the country. And we are looking forward to it happening whenever the changes take place. There'll be short-term adjustments in the market because the price to the consumer will go down to that extent. But I think the long-term view is very, very strong.
Right. 50% tariffs by the United States and ongoing trade tensions with the US. How is that impacting Ceat? And what kind of recalibration in strategy have you had to undertake?
So our total exposure to the US market is less than 3%, or just about 3%. Out of that, 25% is actually the auto component duty, which is applicable on truck bus radial and passenger car radial, and 50% reciprocal duty is applicable on off-highway tire. So off-highway tire is about 1.25% of our overall business, not much. So that will come to a standstill if it continues at 50%. But for the rest, I think we are not very uncompetitive with the rest of the world. We are actually at par with the rest of the world because it's a category level duty of 25%. So we will continue to explore growth in passenger radial and truck bus radial in the US market. Sri Lanka, from where Camso will operate, has a duty of 20%, which is again at par and very competitive with other similar markets like Vietnam, Indonesia, etc. So we'll continue exploring the US market for further growth for OHT from Sri Lanka.
Right, that is an important point. You will use other markets to manufacture and export to Sri Lanka to US as well. And overall, if you were to be asked about growth in FY26 in light of geopolitical uncertainties and the demand sentiment in India, how would you peg that, and what would be your outlook at this stage?
So Q1, we have grown by double digits, and we expect to continue this momentum through the year and end the year with a double-digit growth. There'll be some headwinds when the GST changes happen, as we expect. Maybe a couple of months, the trade will downstock and adjust to the new regime. But again, the growth will be stronger post the drop in GST rate if it were to happen. So I'm overall quite bullish that we should be able to deliver double-digit growth through the year.